Say hello to Marcus Carlson.
Hi there, Chris. Hi there, everyone. We're going to start with a massive deal by Facebook. It's attracting a lot of attention today. The social network is buying the messaging application WhatsApp. The stock and cash transaction is worth an eye-popping $19 billion. And the question is whether WhatsApp is actually worth it. Some analysts call the purchase a desperate move by Facebook. Others say it's a bold decision to go into one of the hottest areas of the tech sector. Julia Seeger takes a closer look now at the pros and the cons of the price tag.
The world's largest social media is buying itself a facelift. Facebook hopes its purchase of WhatsApp will help it reach another billion users. The $19 billion price tag has raised eyebrows, but some say it's a good fit.
But when you look at how much growth WhatsApp has managed to achieve over the last number of years, going from around 200 million users to 450 million users, which is way more than the likes of Twitter, I think it's a way for Facebook to maybe engage the younger market, which it has been losing favour with over the recent quarters.
WhatsApp enables people to send text, photos and videos on their smartphones and charges users $1 a year. The application has 450 million monthly users, 70% of whom use it every day. The service is also adding 1 million new users each day. And when dividing the enterprise value by the number of users, WhatsApp customers look cheap at about $40, compared with a Facebook user or a Twitter user. The deal, however, is also raising fears that Facebook and other technology companies are starting to become overzealous in their pursuit of promising new products and services. Analysts say messaging apps are volatile and that WhatsApp could soon become overrated. They also wonder how Facebook will make money from WhatsApp. Its founders have so far been against ads and other gimmicks.
Moving on now, there are renewed concerns that China is heading for an economic slowdown. China's manufacturing industry, at least, seems to be going through a rough patch. A key reading of manufacturing from Market and HSBC came in at a 7-month low in February. The index fell to 48.3 from 49.5 in January, and anything under 50 signals a contraction. We're going to do some more number crunching now. The private sector in the Eurozone shows signs of steady growth. A reading of both manufacturing and services from Market fell back somewhat from January, but the drop was only marginal and it remains above the 50-point threshold that signifies an expansion. To be specific, the PMI index for the Eurozone came in at 52.7 this month. Germany is powering ahead. Its individual reading is at its highest since June 2011. One worrying point, though, is France, as its reading is at a 9-month low. Let's take a look at how the stock markets and at how they've been digesting all of these different readings. We saw a mixed picture at the close in Europe. The China manufacturing data weighed on shares, particularly in export-dependent Germany. In the United States this hour, the indices, they are trading higher. A report that shows that manufacturing activity in the US accelerated this month is helping shares on Wall Street. The investor reaction to the WhatsApp deal by Facebook was tepid at the start of trade, but Facebook shares there are currently up by more than 1.5%. And if we look at some other individual companies, Walmart shares, they're falling back over on Wall Street. It comes after the world's biggest retailer reported a 21% drop in fourth-quarter earnings to $4.4 billion. Weak U.S. sales during the holiday season and costs related to an international expansion weighed on the bottom line. Shares in BAE Systems tumbled earlier in London. It came as the British Defence Group warned that future earnings will fall as the United States cuts its military spending. The company also reported a slump in full-year earnings to £168 million from £948 million back in 2012. A report that Germany would reduce an order for fighter jets from BAE also weighed on BAE stocks. Here in France, meanwhile, shares in Europe's biggest airline, Air France-KLM, gained somewhat. It came even as the carrier reported a €1.8 billion loss for 2013. The airline blamed a technical tax write-down, but it does say that the underlying business is actually making money again and is improving further. That's the business news for now. I'm going to throw it back to you now, Chris, for the rest of it.
Thanks very much, Marcus. Next up, it's Web News.